Good evening, everyone. This is James from Dividend Stock Talk, where we talk about investing in dividend stocks for weekly and monthly cash flow. It is Thursday, November 2nd. It is 9:30 p.m. This week has been rather strange for us because apparently we did a bunch of trades last week, and we ended up buying stocks rather than the spreads, because we usually do just the spreads. Buy some calls, sell some calls, and collect the difference between the two. And we are averaging a little over 1% per week, which is nice. But last week, the stocks went down for some reason, and we ended up owning two of them. So with that said, let's jump on in and take a look at what we're looking at this evening. We're not going to go through a whole lot because we're stuck with two companies and bringing our average way down, making me very unhappy. All right. The way it looks is we got BK, Lowe's, and PFE. We sold off some covered calls today. Didn't make a whole lot of money this week, but money's money. We made a couple $100, which is a good thing. A couple of percentage points. That's nice. So let's get started with this and then go from there. The Bank of Mellon. What is that? BK. Here we go. Open that up. BK starts out the year at the low of the year at 42.71. It takes about a week for it to jump up to a trading range of 47, which it stays at for about 6 or 7 months. From there, she jumps up to a trading range of 51 to 54, and she travels there for about 4 months, where she is now at 51.40. Okay, so it looks like she went up, came back down, and she had a lot more volume. The blue line's in the back. That's the volume. Now here's the average volume way down here. And this is the volume we've had for the past couple of weeks. And this thing's been hit the high of the year, 55.31. Now this could all be profit taking. I really don't know. This company has a dividend coming up this week, so it looks like we'll be actually capturing the dividend, which I normally don't do in this trading account. Now, I trade 4 or 5 different trading accounts because each account has a different trading strategy. This one just so happens to be options or spreads. Very profitable and not a lot of, there is some risk with spread. Remember, with more risk, there's more reward. Less risk, less reward. You want 100% safe, take your money, put it in the bank. They'll give you 1%. Okay, that's what the average CD is going for right now. 1%, 1.1%, 1.2, something like that. There's absolutely no risk, and you're going backwards. Let me say that again. You're going backwards because your money is earning 1% per year. However, inflation, the actual value of your dollar, is going down. So to at least keep pace with inflation, your returns have to be equal or more than what the current inflation rate is. Now, I'm not going to tell you what the current inflation rate is because, totally honest with you, I don't know right now. Why should I? I'll tell you what Einstein once said. He was once asked the question, how many feet in a mile? He said, my dear boy, you know that accent Einstein always had, my dear boy, why should I bother cluttering my mind up with information that can easily be fetched by someone? And he's right. You can easily fetch that information. How many feet are in a mile? Boom, check it out. You want to know what the inflation rate is? Do a little bit of research. But I know it's more than 1%. So if you're not gaining more than what you're returning, okay? If you have all your money into a CD, great, more power to you. However, the value of your dollar is getting less and less every year because you have to earn more than the current inflation rate. All right. That being said, let's jump on in. All righty. Okay, so BK, the high of the year was 55, and now she's dropped down. And I don't know if this is all from profit taking or something in the news, but I do know that BK has a dividend. All right, let's get rid of this and then go to BK, Bank of Mellon. The month. What? Oh, it's November. Let's go back to October. October. When does BK have its... That's weird. BK does have its dividend. I was pretty sure it was this week. Okay. Let's clear filter. Why aren't I seeing anything? Oh. Clear. That's not clearing the filter. Okay. Go this way. There you go. Now BK does have, what do you call it? What do you call it? What do you call it? Dividends. And where are they? CBS, low, EOG, that one, that one, that one. All right, let's go to November. Now that's amazing. And I know it's here somewhere because I usually don't invest in a company unless it has dividends available and weekly dividends. Oh, okay. There we go. BK, there it is right there. Bank of New York Mellon Corporation, 24-cent dividend, and the announcement date was the 19th. The EX date was, what is that, Monday? Yeah, the EX date was Monday. Okay, so the height of the year here. Okay, the EX date was Monday the 30th. Right there. Okay. So we really wanted to be out on Friday. But here we are where we are. Anyway, let's go back here. BK, when did we get into BK? All right, we're going to BK 1028. Now, why would I do that? Oh, yeah, that's right. We did a spread that week. Okay, that's right. This is one we did the spread on, and it went from where we wanted it, which was 52. 52 way down here. Yeah, so the last 4 days in a row. All right, so strange enough is we're actually, oh, when is, let's go look at that. All right, so the EX date was the 30th. The date of record was the 31st. Okay, so let's go back. Okay, the EX date was the 30th. Date of record is the 31st, and the payment date will be the 9th. So next week, we're actually going to be catching 24 times 5. Let's calculate it real quick. All right, so 24 cents per share. Let's get rid of that. This must be 0.24 multiplied by 5,000 shares. That looks good, doesn't it? $5,000 shares equals 1,200 bucks. Lovely. So we actually going to make 1,200 bucks because we collect the dividend. Now what we want to do, considering we're collecting that dividend, is to reset the sale price at the purchase price where we got it at. Or, better yet, we got this at 52. Now, today, now we already went into, let's bring up the calendar. Oh, we already seen the calendar, didn't we? Yeah, by doing that, it brings it up. Okay, so the EX date was Monday. The date of record was Tuesday. Okay, so we bought it last week on the 28th, which means we are eligible to collect the dividend, which is $1,200. Now we also sold credit, not the covered call on BK right here this morning for 7 cents a share. Now that brought us in, was it $120? $175 this morning. Not a lot of money, but $175 plus the $1,200 for the dividends. That's a nice little paycheck. Thank you kindly. And hopefully, if this thing goes back up to 52, closes above 52 tomorrow, then next week we won't own it. But if we do own it next week, BK. One more day, let's get out of that one. Let's look at this one. 52 is 19 cents a share. So that could be another $1,000 right there. That'd be nice. Do $1,000 every week on that. I would like it. Okay, so anyway, so that's BK, or Bank of Mellon, New York, or whatever it is. The stock went down a little bit, so we're down 2,800 on the stock itself. Now, we're not going to sell the stock at a loss. We're going to keep on holding on to it and continuing selling covered calls on it. If you look at it, 7 cents is not a lot of money, but 7 cents per share at 5,000 shares, it's $175. So it was $175 this week. Granted, next week hopefully it'll be a lot more. Let's jump in and look at Lowe's. Lowe's is next on the list. L-O-W. Wait, before I do that, before I look at Lowe's, let's continue. Let's look at the seasonality on BK. Now look, it's plain to see. Now, if some of you don't know what seasonality is, it's how does the stock react at certain times a year. Now, right now we're into the fourth quarter. We're actually the second month, because there's 4 quarters. Each quarter has 3 months. October was the first month of the quarter. This is the second month of the quarter. And look at what we have to look forward to. Okay, that is plain to see. This is where the stock is right now. And if you cross-reference, or use the crosshairs from here, it looks like she's going to go sideways for a couple of days, and then she's just going to continue going up right through the end of the year until she gets to the beginning of December. She's going to drop a little bit and then goes right. But for the next 3 or 4 weeks, it's going to be going up. And that is a nice thing. And that's what I like to see. Okay, so here's where we are. This is what she looked like for this year. Now the blue represents this year, and I have my stock chart set at 10 years worth of data. So this is 10 years worth of data. This is the average of what the stock moves over the last 10 years. All right, so hopefully, if it does what it did last year and the last 10 years, this thing should be going up in the next couple of weeks, which is a great thing. So let's get out of there and go back to, Lowe's. So we're on Lowe's next, which is the next one. Okay, Lowe's started out the year at the low of the year at 66. It took a couple of weeks for it to get to a trading range of 72, where it traded for about 3 months, jumped up to 82, and it was there for about 2.5 months, dropped back down to 76, and traded there for the remainder of the year. And she settled in right at 79, but today she had a huge down day. And look at all, you almost can't see it, but it's there. Look at the blue behind the close of the day. That's the volume. And it's close to being twice the amount of volume as it was yesterday, the day before. Like the average volume is right down here. And look at the volume today. Okay, she opened up at 79.20. And for some strange reason, she had to lower the day at 75.36. Why is that? I don't know. Anyway, we're into Lowe's at 80, and she's at 79. But we did sell the covered call on that for 111 bucks. We only sold two contracts because that's all we had on that one. We should probably get out and buy some more considering this thing dropped down to 76. But it is what it is. All right, so that's what Lowe's did. And as you can see, we did sell the covered call on Lowe's right here. See, we got 200 shares at 80. And we sold someone the option to buy it from me for the exact same amount I paid for it, which is 80 bucks. And I got 111 bucks. Granted, it's not a lot of money, but let's see what we're looking at so far for the year at Lowe's. All right, this is all the trades that we've done so far this year. And Lowe's is right here. Okay, so for the most part, at this moment in time, we're down 568 on Lowe's, but we're up 3,300 for the year on Lowe's. Okay, so this is our profit and loss year to date. That's what we got there. Okay, so let's get back to what we're looking at. PFE, which is Pfizer. That's the third one we're looking at. PFE. There you go. Now, Pfizer started out the year close to the low at 30. Found the low within a couple of days at 29.82. And then she got to a trading range, which looks like 31 to 33. And she traded there for about 10 months. In the last 2 months, she jumped up to the 35 area, where she is now at 35.46. Now, where are we with Pfizer? All right, we got Pfizer at 35.50. And we sold someone the option to buy it from us at 35.50 for 150 bucks, something like that. 7 cents a share, because it's the exact same as the one we sold earlier there. So, if she goes up 4 more cents by tomorrow, we should be out of Pfizer, and we should just be into Bank of Mellon. All right. All that being said, there is always a chance. It had 3 up days in a row. Okay, 1, 2, 3. Is it going to have another one tomorrow? Who knows? Nobody really knows. Stocks move 3 directions and 3 directions only. They move up, they move down, and they move sideways. Now, a lot of people say sideways is not really a move, but it kind of is, you know, because if you can do a spread, let's do a quick check on this. Let's put in Pfizer, which is PFE. All right. And PFE right now is at 35.46. Now I want to take a look at the verticals, which is the spreads. Now, the spreads being you buy one at one price and you sell one at another price, and you collect the difference between the two. And that's all you can collect. Let me give you a perfect example. Right now, Pfizer is at 35.46. If she goes up 4 cents, and then it would hit the 35.50, which would be this one right here. All right, now take a look at this. You buy the 35 and you sell the 35.50 for 33 cents. It doesn't sound like a lot of money because it's kind of not a lot of money. 33 cents per share. Each contract is 100 shares, so that's 33 bucks. 33 bucks to buy one contract. But what is your profit potential? Well, let me quickly show you. Let's go this to 1. All right. It's actually going to cost you $41 because you're paying $8.45 for the contract. All right. The maximum amount of profit you're going to make is 17 bucks, which is very close to 40% return. Okay, so it's costing you 33 bucks for the trade. Then you're paying commissions for $8.45, depending on what trading platform you use. Now, Thinkorswim charges $8.45 for this trade. There's other trades out there. I heard Robinhood doesn't charge anything for their trades. Don't know how they do that. But the most inexpensive one I know of is just to trade. JUST, the number 2, and trade, the word trade. Just to trade. And it's $2.50 per trade. Okay, so anyway, back to where we were. The most you can make on this trade is 17 bucks, and it's costing you 41. That's not a realistic number, so let's get a realistic number. Let's put up 50 contracts. Okay? Now, the most you can make is $850 off of 50 contracts. And how much is 50 contracts costing you? $1,731. All right, it's almost $1,732. But that, my friends, is very close to a 50% return. But what has to happen? Okay, the stock is at 35.46. You have 3 up days in a row. This thing's been trending to the upside, and she had some profit taken here. Okay, so is she going to continue up? Is it going to do that 4 cents tomorrow? 4 cents is going to equal to almost 48% return. That's if the stock goes up. Let's take a look at, remember I told you it goes 3 different directions? Now, let's, oh, holy cow, that's for next week. Let's go here. All right, let's look at this one. Here's where the stock is right now. Odds and probabilities say she's either going to continue going sideways, or she's going to go up, or she's going to go down. That's 3 different directions you can go. So how can you do a trade where you can make money on all 3 directions? Simple. You have the spread trade. She's at 35.46. Okay. This trade right here is the 34.50, 35 spread. The most you can make is 50 cents on this trade. However, it's going to cost you 45 cents per share. All right. So 10 contracts is going to be 471 bucks. And what is the maximum amount you can make? The most you can make is 50 bucks. That's it. All this effort, I'm going to pay 471 bucks. The most I can make is 50 bucks. But that is that's a little bit more than a 10% return for 7 days, for 8 days. So this one right here is 8 days. See that? It expires next Friday. So what happens between now and next Friday? If the stock stays exactly where it is, doesn't move up, doesn't move down, that means goes sideways, doesn't move anywhere, you're going to make your 10%. Okay? If the stock goes up, you're going to make your 10%. The stock can double, triple, or quadruple, and guess what? You're only going to make 10%. Now, the nice thing about this particular trade is if the stock goes down a small amount, which means right down to 35, okay, if you drop from 35.46 to 35, which is right here, which seems to be a little bit of a support, you know, you can't really call it support because it's only like 4 days. All right. If she stays above 35 in the next, wait, 35. Yeah, 35. Right here. If she stays above 35, by the end of the week next Friday, you're going to make your 10%. So it's one thing I love about the spread trade. If it goes up, you make your 10%. Stays the same, you make your 10%. And if it goes down just a little bit, you still make your 10%. So in actuality, the break even would be the 34.95. Now, can the stock drop below 34.95? Of course it can. Look what it did right here. She opened up at 35.27, you know, and she closed at 35.46. That's not a lot of spread between the two. However, the high of the day was 35.51, and the lower of the day was 35.03. Wait a minute, that's not right. No, the lower is way down here. See, these numbers aren't changing. Oh, that's why. Oh, let's get out of here for a second. All right. We're going right here to this one. it opened at 35.05 and it closed at 35.06. It's like almost no movement whatsoever. However, the high of the day was 35.34 and the low of the day was 34.10. So the stock does fluctuate quite a bit, but as long as she closes above 35, you're going to make your 10% on this particular trade, which expires next Friday, right? So, that being said, let's see if I have any questions. If not, I'm out of here for the day. And here we go, right here. No questions. Outstanding. This is James from Dividend Stock Talk. We're out of here. And we will catch you tomorrow at 3:30 to find out exactly what's happening with our positions.